Greetings, this is Dr. Jeffrey Scott, and this is my Market MRI Pro update for Wednesday, April 2nd, 2025. I am doing this at about 10:15 p.m. We'll talk about where the markets are and what they've done. It's been quite a few hours, to put it mildly. As it says here, markets dive after hours on tariffs. Should we buy the dip? Again, my name is Jeffrey Scott, marketmripro@gmail.com or hgsidoc@gmail.com to contact me. Or better yet, join my Google group, which I'll bring up in a second. As always, this is for educational purposes only. Anything I talk about is in the spirit of education, not investment advice. The intent of the video is to show you how I use the tools of top-down analysis, how I apply them. Trading involves risk. You and are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky, and you should always consult with your financial advisors before making trades. And I have tools on multiple platforms, but I am an independent trader. If you like live education and you like bargains, think about coming to see us in Orange County, Tustin, Orange County, June 6th through 8th, Residence Inn and Suites. I'll be there live. There'll probably be about 20 of us in the room. We have not decided yet on an online option. Greg Mills at gam72054@aol.com has more information, and I believe it's $300 for 3 days, and we'll make some announcements about additional traders, speakers as we get closer. Always welcome to join my Google group. It's called Top Down Trader. It's free. It's not for solicitation. Yes, I will have webinars for launch videos. I'll have coupons for discounts, but no one tracks whether you buy or don't buy. No one cares whether you buy or don't buy. Well, I care. I love to sell stuff, but it has no relationship as to whether or not I can keep you or include you in the group. In fact, not only is it free to join and no obligation, I'll give you discount coupons. Know your news and earnings, so it will be interesting the rest of the week. We got jobless claims, trade deficit, services on Thursday. We got 2 Fed governors. Friday, we got the monthly employment report, which is always a big deal. And then look who's speaking at 11:25. Chairman Powell. So let's take a look at where we are. Let's look at how the day finished. We'll talk about how I'm playing the markets on Thursday. Notice, after hours, we didn't have a lot of earnings, but Restoration Hardware had the big dump. I mean, it just sold off hard, and that was, not just the tariffs, although they probably are impacted. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. On to the charts. Boom. So here's my Market MRI Pro. Strong market day. You can see the returns here, led by the Russell, which has been the recent laggard. All the major indices were up, finishing the top quarter of their day. The VIX was down. We almost turned positive on a short-term New York Stock Exchange, highs minus lows, new highs minus new lows. Still pretty negative on the NASDAQ. If you look at what was leading, discretionary, materials, financials, tech was positive 0.74. Strong session. The laggard was Staples. That's exactly what you want to see. You would like to see the defensive stocks not leading the market. And if the market's going higher, you would expect them to be giving something back. What shocked me, if you look at one-day change on themes, biotech, retail, leisure entertainment, fintech, blockchain, cloud, infrastructure, transports, millennials, home construction. Gosh, it sounds like growth stocks were back in favor, at least until 4 o'clock. If we look at what happened in the market, in blue shows the number of sectors that were up. All the sectors were up, whether they were S&P 1500, NASDAQ, or NYSE. 91, 89, 80, and 89% of industry groups were up. And from a stock perspective, 83, 67, and 70%. This was a very strong day in the market. A couple of interesting things. I have a number of things that I scan for. I scan for divergence. 200 of the S&P 1500 stocks are showing me evidence of MACD divergence on one of my scans. If I looked at CCI divergence, stochastic divergence, RSI divergence, we have really built up a lot of stocks. So even though we're selling off hard, underneath we have a market that really looked like it wanted to go higher. Timing model on the weekly, you could see we're still red across the board, and I expect to, because we still got a ways to go to get to that WMA, even if I didn't know the futures were horrible. If we look at the daily charts, the interesting thing is it was a good enough session. It takes a second for the dailies to come in. And you could see down here that the diamonds actually flipped to a buy signal. Now that was before tariffs. I look at the daily and we'll spend more time, but it really looks like we're pulling back into resistance. We pulled back into resistance that actually crossed above it on the diamonds, hence the new buy signal. If we look at the index ETFs, so here was the flag on the spider. We're getting back into the flag zone. You could almost argue we're forming another flag. A couple of things that I'll point out. I thought it would write on this. We're updating that, but we traded below the low here, and we're probably going to be opening perhaps below the low here. It'll be interesting to see, but you could see the spiders moving up higher. They haven't gotten back to their 200. You could see the Qs moving up higher, failing at the 17. The diamonds, which interestingly turned to a buy, barely getting up to where their 200 is. And let's see, the 200 is at 422.01 and it closed at 422.03. So technically we broke above the 200. Look at that. The Russell bouncing around the bottom. The VIX came back again in the markets on Wednesday, and the dollar is just languishing. If I look at commodities, again, this is looking at Tuesday, not Wednesday. Wednesday. I'm sorry. I'm so excited about what we're seeing in the futures. On Wednesday, gold is consolidating, as is silver. Oil had another positive session, as did natural gas is trying to bounce here off the 50. And you could see the 10-year and the 30-year. 10-year was up just a bit, about 1%, and the 30-year was up. Actually, it says it's down. No way, it's not down. 30 years up about 1/4%. If we go into the buckets, you'll see the theme that we saw yesterday. The NYSE and the S&P 1500 are showing reduced stocks below, more stocks above the midline, and shifting to the right and recovering. The Russell 2000, the NASDAQ, the small caps really not moving much at all. So not bad, not oversold, not overbought. Surprising how the difference in movement to the right on these guys versus perhaps the smaller stocks. Market breadth, remember this is on Wednesday when the market had a great session, all the sectors were up, and you could see that the NYSE was up nicely, reclaiming its 200. The NASDAQ was up nicely, well below the 200. If you look at here, stocks above the 20, 50 in white and 200 in red, turned up some. Same thing on the NASDAQ as they got an oversold area. If we look at this being the new high, new lows, negative on both, so you still have more new lows than new highs. But if you look at advanced decline, excuse me, and up-down volume, we're positive. This was a strong market. So why am I so nervous? Let's take a look at the futures after hours. This is TradeStation, and we pulled back to this level here. You can see we're still down on the ES, looks like 164. On the NASDAQ, excuse me, those are so small because I switched monitors. Excuse me, almost too small to see, but We're down significantly. Let me just look on my phone. I'll tell you exactly. Right now, NASDAQ's down 852. It's bouncing around. NASDAQ's down 686. So Dow's down 844 now. NASDAQ 683. E-minis 163. Russell 87. Notice how they've all bounced off their lows. Notice that the Roy Kelly cycle low indicator has fired with the red line. This could turn out to be the low of the move. Um, I'm excited because, you know, how do market pullbacks end? Well, sometimes they end up quietly and they just V bottom and they move up slowly. This is a more complex, multiple pullbacks, tests, but they end with a massive sell-off of huge proportions. And we saw that, and we're seeing this after hours. I think there's a fair chance the market's going to close much higher than it's trading right now on Thursday, and that might be the time to start thinking about buying. Now, would I buy at the open? Heck no. Is this investment advice? No, it's not. Just from my experience, here's a few things I'm going to do. I'm going to have my trading platform open before I go to sleep tonight. The reason for that is you are going to see people wake up, look at their 401ks, freak out, and dump stocks in the morning. So I wouldn't be surprised to see the markets pull back first. Other thing that's going to happen around 11:30, people are going to get their margin calls, and people are going to sell stock to pay their margin calls. And then the market, I think, has a chance to come back higher. That looks like a reversal here. Um, do we retest it? Likely. Does it hold? We'll see. Am I convicted that I'm definitely going to be buying the dip? No, but I'm going to look for opportunities, because if you just put on the daily chart, you can actually see that we're seeing some nice bottoming tails, and across, this is Bitcoin, so I look at it differently. It'll be interesting to see. So, and here is a couple days. Here's that bottom over here. Here was the test over here. We did break through the prior low, but we quickly reversed. Undercut and rally? We shall see. So am I depressed about this? No, I think it's an opportunity, and I think we're going to see a big flush before the market starts to get better. Now I'll put on the bearish hat. The tariffs just came out last night, or tonight. This may be a total sell the news event, and we go lower. But how does that make sense? Was anybody in the universe surprised what happened today? It's been telegraphed for weeks. In fact, if he's done threatening, and from here we start to negotiate and lower tariffs, the market goes higher. I think the employment report on Friday is a confounder that might keep the market under control. And I think Fed's Powell's speech will be closely watched. But it's going to be an interesting day. I can't wait. These are the days you can make money if you get the reversal. And that's what I'm going to be looking for. So, do I want to look at stocks tonight? No. I have no idea what's going to work tomorrow. In fact, if I'd shown you this chart and I didn't know that, let's put in Restoration Hardware. That's not Restoration Hardware. RH. Used to be called Restoration Hardware. There'd be no reason to buy this. It's got a nice little uptrend off the bottom, but well below the 200. Let's see if we capture the earnings yet. We did. Imagine that. Earnings came out today, April 2nd, after hours. You can see they were up 119%. Revenue was up 10%. But the problem is they missed the expected number. Surprise, minus 17 on the earnings, minus 2%. And the PE forward was 30, and the market's cratering after hours. So what would I do? Are there any stocks that I would buy? Well, I don't think that the FANGs are done. And let me just give you current prices so you can get a sense. Amazon closed at 196. It's currently trading down $10. That means it's getting really close to this bottom. Buying opportunity or the beginning of another leg down? I can't tell you that. Google closed at 158.86. Here it says 157.04. Trading at 154, so that's not a big drop. Meta, I gotta hit the keys here. Closed at 583.93, trading at 560, down 20 points. Microsoft, give me a sec. Closed at, I'm just looking at my TD Ameritrade for real-time quotes to see what's going on after hours. In Microsoft after hours, so closed at 382.14. It's trading after hours down $8. So it's clearly broken through its bear flag. Netflix, this is one that has been really strong. You could see it had a big up session in the market, and how disappointing after the rally we had this afternoon to be talking about the market selling off. Netflix, which has been the guide, the king, the leader, believe it or not, it closed at 935, up $7, and it's going right now. If the market opens, it's 907. Sell, bid, ask is 918. So a big spread. Who knows where it's going to end up? But it's going to end up probably at least $10 down. Nvidia closed at 110, really flat on the session. Currently trading at a little bit over 105. And Tesla, one that has really taken on the chins because of some negativity towards Tesla owners and Elon Musk because of the Doge and others. Although I saw a report he's going to quit that job. And Tesla closed at 282.76, currently trading right now at 266. You're going to see bargains. How's APP trading? Let me take a look at that. I mean, it's a stock I love. It's still got great fundamentals, but there was a Hindenburg report closed to the market at 290 APP, and it's currently trading at 267 to 269. So I'm not going to give you an individual stock pick because the most important thing is you don't jump until the market's ready. I wouldn't jump at the open. I'd expect to see some selling when people look at their portfolios, see if there's any margin calls. But I'm going to get prepared. And one thing that I've learned over years, again, get your trading platform open. There might be massive volume and hard to get on at the open. Once people look at their statements and look and get their margin calls and that selling abates, I think we'll have a chance to go higher. And I'll just leave you with some words of wisdom that I learned a long time ago. It's not where it opens. It's where it closes. Have a great day. Short session, a little bit all over the place. I'm still getting over this big sell-off.